welcome to another knowledge presentation by Tax 50. Today we will be talking about keep more and pay less. Are you self-employed and looking to pay less income tax? Do you want more money in your pocket after paying tax and N.I.C? Do you know what expenses you are allowed to claim? Do you know how much income tax you could save if you did things right? Are you an employer and looking to save money? Do you want to retire earlier than normal? Basically, what Tax 50 is trying to ask is, do you want to keep more of what you make? Now, before we begin, I have a quick notice for you. This notification is to let you know that this knowledge presentation to keep more and pay less by Tax 50 is designed for those individuals who are in business and are looking to drastically reduce the amount of income tax and national insurance contributions they pay to HMRC. The information contained within this presentation is based on the income tax rates and allowances for year ending 5th of April 2020 as published by HMRC. Some of this information may also be valid and relevant for year ending 5th of April 2021. If you find the information contained within this presentation useful, then please like and share this presentation with someone you think it would benefit. Please also like the Tax 50 Facebook page and subscribe to the Tax 50 YouTube channel to receive regular knowledge updates. For the contents of this presentation, we'll be talking about type of trading entity. This is the type of trading entity through which you should be trading, wages, dividends, expenses and mileage, personal pension payments, and we will finish off with more tax saving strategies. Hopefully this information contained within the presentation will help you save quite a substantial amount of money as long as things are set up and done correctly. Type of trading entity. As someone in business, you should always be looking to trade through a limited company. In doing so, you will receive a number of advantages that are not usually available to someone who is self-employed or in a partnership. Some of these benefits include becoming much more tax efficient, giving yourself limited liability, especially with HMRC, being treated as a truly separate entity, having more of a professional status, being able to take advantage of company pensions, and you will also get more tax efficient exit strategies becoming available. It makes sense to trade through a limited company. Accounting and bookkeeping costs for a limited company are comparable to being a sole trader anyway, so it makes sense to use a limited company. Type of trading entity continued. Limited company. Pretty much anyone who is self-employed could start trading through a limited company. You can incorporate a limited company for any type of business or trade. It does not matter if you work for yourself or you have a business with employees. Some examples of limited company trades include landlord, estate agent, pub, bar, restaurant, builder, property developer, gardener, window cleaner, private hire taxi driver, hairdresser, hair salon, beautician, courier, newsagents, off license, clothes shop, chip shop, retail, wholesale. There are also many more businesses not listed who could confidently and competently trade through a limited company, especially those businesses who are online businesses who trade through the internet. Now, in this part of the presentation, we'll be talking about wages. When trading through a limited company, you must make sure you do two things. Number one, make sure you claim wages each month from the company through payroll. Number two, extract any further money you need in a tax efficient manner, such as dividends. Wages. You get a basic personal allowance for a reason. At the moment, this is £12,500 per year. You should use it or you will lose it. The personal allowance can't be carried forward each year. You simply get what you are given. Any element of your personal allowance that is not used is sacrificed. For a new startup company, this is actually brilliant because by declaring a wage each month from the company through payroll and using PAYE, you can effectively create a vehicle for you to carry forward your personal allowance each year until the company is in a position to pay you what is owed. Wages continued. A further benefit of claiming a wage each month from your company is that you can receive wage slips and you are also confirming your employed status with HMRC. Another huge benefit is that your national insurance contributions record will be kept up to date. By making a small payment each month for national insurance contributions through the company, you can ensure you maintain and protect your state pension. Wages can also be taken in addition to expenses such as mileage payments in accordance with the HMRC approved mileage allowance to make sure you keep more of what you make. Taking wages from your company is just one very practical way of making sure you can keep more and pay less in tax and NIC. However, this is only one of the strategies available to you. The presentation will now be moving on to dividends. As long as the company makes a profit after tax, you are free to declare dividends to yourself. This process can be used to draw down the remaining funds in the company in a tax efficient manner. For example, the first £2,000 in dividends forms part of your personal allowance and as such is tax-free. You can also pay a further £2,000 to a partner or spouse in the same way if they are shareholders. National Insurance Contributions (NIC) are not payable on dividends. The basic rate taxpayer currently has dividends taxed at 7.5% on income above the personal allowance. The higher rate taxpayer currently has dividends taxed at 32.5% on income above the basic rate. An additional rate taxpayer currently has dividends taxed at 38.1% on income above the higher rate. By taking dividends, you can take advantage of lower income tax rates across the board and also an extra tax-free allowance. This is a great strategy to supplement the employed income that you receive as wages from your company. Now we will be moving on to expenses and mileage, and we will start with expenses. As long as the expenses you claim meet the wholly, exclusively and necessary rules as set out by HMRC, then you should have no problem in being reimbursed by the company for any costs you incur. Claiming expense payments from the company helps you reduce the company profit so you pay less corporation tax. Some of the expenses you can typically claim include mileage payments for business miles travelled in your personal vehicle, professional subscriptions and trade body memberships, pension payments through the limited company, tools and equipment that are necessary for your duties, mobile phone payments, subsistence, money you spend on food or overnight expenses, certain types of life insurance. You must make sure you keep receipts, statements and invoices for any expenses you incur and claim from the company. Expenses and mileage continued. Now we will move on to mileage payments. You can claim a mileage allowance from the company for any business miles travelled using your personal vehicle. The current HMRC approved mileage rates have been the same for a number of years. The current HMRC approved annual mileage rates are as follows. For cars and vans, the first 10,000 miles is charged at 45 pence per mile and above 10,000 miles is charged at 25 pence per mile. For motorcycles, the annual mileage rate is 24 pence per mile, irrespective of if you do less than 10,000 miles or more than 10,000 miles in a year. Similarly, for bicycles, the approved annual mileage rates are 20 pence per mile, irrespective of if you travel 10,000 miles in a year or more than 10,000 miles in a year. By claiming your mileage allowance, it goes a long way to helping you pay for the upkeep of your vehicle. I would now like to move on to personal pension payments. The company can make payments on your behalf into your personal pension scheme. This is currently capped at £40,000 per year in total across all personal pension schemes you operate. The pension payment made by the company can be used to reduce the company profits, and as a result, the company pays less in corporation tax. The pension payment made by the company directly into your personal pension scheme is also exempt from personal income tax and national insurance contributions. Now, as a top tip by Tax 50, If you make the maximum allowable contribution for the current year into your pension scheme, then you can utilise any unused allowances from the previous 3 years. More tax saving strategies. Apart from the practical solutions provided to you already, there are still more ways you can keep more of what you make and pay less in corporation tax. The wonderful aspect of trading through a limited company is that you can also claim things like capital allowances on plant and equipment, including vans, research and development tax relief, annual investment allowance, often referred to as AIA, work from home allowance, losses you incurred in previous years, training and development. It makes sense to try and do as much as you can to claim all the allowances you need. More tax saving strategies continued, and this one is another top tip by Tax 50. It can also sometimes be beneficial to use your partner or spouse as a way to extract more money from your company in a tax efficient manner. As long as you make sure the limited company is set up correctly and accordingly, then your partner or spouse can also benefit from similar circumstances to you that will allow you to effectively increase the amount of money you can bring home and reduce your household's overall tax bill quite substantially. This is because the company can also pay them a regular monthly wage as long as they are employed by the company, pay them dividends as long as they are a shareholder, pay into their personal pension scheme as long as they are an employee, pay them a mileage allowance as long as they qualify and use their own personal vehicle. This is also a very good way of making sure that their national insurance contributions record is kept up to date and fully paid if it otherwise would not have been. This is a top tip by Tax 50 and a tip that we believe everybody should be taking advantage of. Finally, I would like to say a great big thank you. Thank you for taking the time to watch this knowledge presentation by Tax 50. Please like and share this presentation if you think it will be useful to someone you know. Please also subscribe to the Tax 50 YouTube channel to receive regular knowledge updates.